Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. So, as you can see, yesterday surprise has led market to complete the first stage of our trading plan very fast. So as you probably heard about the temporal close of the euro flying between the United Kingdom and European Union. So due to the new type of the virus in the United Kingdom, so this probably will have the temporal effect. But currently, it's for now it stands for the lockdown stands approximately for 1 week, but nobody knows what the continuation will be with this step, because it's logical to suggest that if lockdown has taken place and the virus type had been found already and identified in the United Kingdom, it means that it definitely stands already somewhere in the European Union as well. And sooner or later, but probably sooner rather than later, it also will be found there. What I would like to say is that the real impact of this event, despite the applying of the lockdowns and currently announced just for 1 week, we will see only after some time. So maybe after the holidays, after the New Year's Day. Because it needs some time to see the real size of the problems that could appear. So currently, you can see on the market, reaction stands very small. It was mostly just first emotional reactions, negative reaction on the event, right, and the month is open. But later, as you can see, market has played back all this recent drop. And by current view, as you can see on the technical side, everything stands very good. Because first of all, market already has completed retracement to the 120-140 area. That should become our entry point, as we said in our weekly report. It's probably 30% pullback we could consider. It's a possible reaction on the XOP. This reaction already is done. It has taken a bit different shape because here, if you remember, we discussed possible evening star pattern. But it has happened so that market has formed simultaneously as a evening star as it completed its target mostly and returned back up. So it was really fast performance. And at the same time, after this reaction, we have got the Polish grabber. That suggests the further upward continuation taken out of this step. This could mean the next swing right to the our target we set in the weekly chart, which is at 2440 area. So the tricky moment here is how market will behave around the range of the grabber. It's it's vital that for the market should stay above these lows. So breaking these lows down probably will be on the background with important events. So for example, the situation becomes worsening as in the United Kingdom, as in the European Union. We'll see some reaction, some results of the new virus, maybe some in the worsening of this epidemic situation or something of that sort. In this case, it's definitely lockdown will stay longer, which makes impact on the markets, on the economy situation, and of course it will be negative, which could suggest further downward continuation. In this case, market probably will drop below these lows. But while market stands above these lows, it keeps the bullish context. And currently we should focus mostly on this stop that we have. So if there will be no significant consequences of this event, this grabber should start to work, and currently we should treat this pullback, minor pullback, as a chance to go long. Because if we'll take a look at the hourly chart, you can see that market shows the upward action, and now it stands with the downward retracement. So there's two levels that you could consider for a possible position taken, 22 even approximately, 21.75. So few levels you could focus on for a position taken. But if we will see some acceleration here, with the becoming strong downward action, this usually very often happens when the market shows a significant pullback, that the market starts accelerating, erasing this action. that will tell you that the situation is turning on the worse scenario. In this case, we turn to this type of action. And probably downward action will not be limited with just the OP as I drawn here, but we probably should be focused on some kind of the XOP target somewhere around 120 confidence support, as we initially suggested it could be with these two levels. So, because actually the bearish context that we discussed previously, it still stands here, because you can see this divergence stands around the target's chance of the hand drawers also stands here. And currently it's still unclear, just because of the uncertainty with this new driving factor that we've got, what will happen, because just 1 day has passed since the first steps have been taken in Europe, and nobody knows what additional surprises this new story could bring. That's why I think that we should not totally deny the possible bearish scenario as well, and just keep an eye on the process that we will have today. So in particular speaking, let's take a look for this type of action. And currently let's be positive and focus on the possible support areas where we could think about taking the long position here and control these lows, because this is vital point. Breaking of these lows means turning on the bearish scenario. Also, guys, another sign, as I said, that could tell you that hardly will get the upward action is acceleration. So minor candles, you'll see stronger candles, faster acceleration, steeper action here. Don't be long, do not take the long position. It means that market will erase this bounce and we will see next step to the downside. That's what we intend to do today on the euro currency. Let's see what the price action will be on the euro currency here.